This is Gabriela Batista from Homes into Reality, and this is Toronto Real Estate by the numbers for October 2022, the video I do every single month, breaking down all the Toronto real estate numbers all across the city. First thing I like to do every single month is just break down the different property types and the average selling prices for those property types for October. And for detached homes, you're just about 1.609 million. For semis, you're at 1.219 million. For townhouses, you're at $863,000. And for condos, you're at $740,000. And let's compare this when it comes to year-over-year values. It's really important because real estate can be very seasonal, that we look at the same time last year and how those numbers have changed. For detached homes, they're down just under 10% at 9.9%. For semis, they're down 7.7%. Townhouses are down just under 3% at 2.9%. And the condos are up merely 0.1%. So they're basically in the same spot they were last year in October. Before I give a little bit more analysis, I want to go into really quickly the month-over-month numbers. And this would be anything from September to October, how those prices have changed this year. So for detached homes, you're up 1.48%. Semis, you're up 0.75%. Townhouses, you're up 3.78%, and condos, you're down 3.73%. And those numbers, again, they're from September to October the same year. I'm going to look into the month-over-month and year-over-year numbers analysis at kind of the same time because I think they cover a really similar story. We all know in January, February, March, prices really shot up really quickly, and then obviously in April and May and June, they kind of shot down just as quickly. So what's interesting about that is it's the first time I'm really seeing, we saw a little bit last month, but now I'm really seeing a steadier picture showing when it comes to real estate numbers across the board, month over month and year over year. They definitely steadied out. You're not seeing a really sharp increase or decrease either way for any property types. Condos would be the only one down 3%. With that being said, like it is very minor when it comes to seasonal averages. It's the first time we're seeing, some sort of calmness to the real estate storm that has been 2022, which is interesting because, volatility is the very scariest thing when it comes to real estate. So having that stability is very important. With that being said, I don't think it means that prices are a bottom at this point. I think there may be more to come depending on how the market reacts to higher interest rates for a longer period of time. But I definitely think it's interesting that prices have steadied out and they show a more complete picture compared to the last few months. Next big number I always look at is your new listings and your active listings. And then we'll take a look up over here. New listings are down 20% and then active listings are up 26.3%. I look back on all of our old data and our old videos, and the trend tended to be 10% was the most common new listing number that was down year over year, 10%. And now it's up 20%. And it may not seem like a big deal, but you're essentially doubling the difference between past months and right now. And it's really supporting a narrative that I'm seeing right now in the marketplace with my current buyers is the lack of quality listings is very apparent. We're seeing a lot of listings that have been on the market 90 days plus, and they're fine listings, but they're not listings that people will jump at right away. People aren't motivated about these homes, and people usually will have to settle for them afterwards in their search. So the lack of good listings coming onto the market that are new is really low. And that could just be people are demotivated to sell their house. They don't want to sell in a down market. With that being said, it's definitely showing in buyer activity because less people are buying, and we're not seeing great properties out there. So that's one thing that's apparent. And like I mentioned before, active listings are up 26%. With that being said, that's a number that we've consistently seen at that number. Inventory that is a little bit stale, let's say, is piling up compared to last year. Last year was a very tight market. It's still a tight market now, but we're up 26% in terms of the amount of listings that are staying on market and may not be selling right away. And the last big number that we always check is our solds that you see over here. Consistently is down again 50.1%. And it's apparent. Buyers are less motivated. There isn't as much action out there. The activity from 2021 was no way going to keep up into 2022 with higher interest rates. Time on market is 21 days versus 16 days last year. Again, we're in a slower market, or at least seasonally, we are in a slower market. Even compared to last year, we're 5 days slower. So there definitely is a shift in the amount of people buying, and it's something that's apparent when it comes to buyers in the market. And what I want to touch on, which is apparent, but I think is important for me to touch on, is the effect of interest rates on Toronto real estate and any real estate in general. Last year, they weren't giving away free money, but interest rates were extremely low. And with extremely low interest rates, you're going to have a huge activity of sales. In 2021, there was about 120,000 sales just on TREB, so the Toronto Real Estate Board. Those interest rates, they shot up this year, so the narrative changes. And then that's why we're seeing activity so much lower. So higher interest rates are going to kill the buyer activity. They're going to kill buyer motivation because the affordability definitely goes down. People cannot qualify as well. And it's interesting because 2021, you have such a low interest rate, and it's a big 180 into 2022 where interest rates are so high. And it's one of the times where we're going to see, record highs and then record lows really, really quickly year to year. So our year to year numbers are going to change a ton. But it shows 50% down of anything, it is common sense now that buyers are affected by interest rates. So I'll ramble on a little bit more just to give you my sense of what I'm seeing right now in the market. And the biggest theme, and I probably talked about it last month too, because it's consistently been there, is the difference in sellers' expectations and buyer expectations. Sellers think that they still can get prices they were getting earlier in the year. And even if they've adjusted their prices, let's say a few percentage points, maybe it's 5% down from what they were in March, they're still not getting any interest in that price point. And buyers think the otherwise. They want to buy today's prices, not last year's prices. So there really isn't a meeting of the minds between buyers and sellers. Sellers want too much, sellers want for less. And people don't really know where things are going to go. So it's a bit of a stalemate. And then with sold activity being so low, it's only the properties that have two motivated parties are really selling. Sellers that maybe need to sell, and they will, see buyer activity, they're lower, let's lower our price and really get motivated buyers in here. So that meeting of the minds isn't always there, and that's why active inventory is up and quality listings are down, because quality listings combined with a great selling strategy are getting properties sold. So that's definitely the difference I'm seeing right now. With that being said, I have a couple buyers now, and we're seeing opportunities out there. It's just about really working the numbers well to know what a realistic price point something is. This is not a time where you shouldn't touch the market because it's so volatile. I think it's a situation where you want to find opportunities and really, you don't want to overpay for properties, but with the right numbers and right analysis, you're never really going to do that in this market. And if someone's comfortable at buying at this interest rate, maybe locking it in for 2 or 3 years, and they know they can afford this interest rate for the next 2 or 3 years and maybe change it, as we don't know what 2 or 3 years down the line in terms of the new interest rates. But at least lock in something that you can afford right now. There are motivated buyers out there. They're a little bit few and far between, but knowing situations where people have to move, family situations, people want to move up and they're in a good situation to do so. There are opportunities out there, and I'm definitely seeing it with my clientele. And maybe it's something that you can see for yourself. That's the last of all the rambling I'm going to do. But like I said, this is the stuff I like to do, and I do with clients almost on a daily basis with people, because every situation is so different. But it's so important to look at the numbers, know the trends. So when you're in a situation when you're ready to buy, you're good to go. You'll probably see in one of these corners over here, this is what I do consistently with first-time buyers. If you have any interest in just tracking the numbers until you're ready to buy Toronto real estate, sign up for Future Homeowners. Scan the QR code and look at my bio, wherever it is. Sign up there. We always give information like this one to our clients so they can track the numbers. So when they're ready to buy, they're in such a good spot because they know so much more than the average buyer on the market. So that's my 2 cents. No more rambling, I promise. If you want any more information, feel free to reach out. I'm always happy to talk and talk anything about real estate. This is Gabriela Batista, Homes into Reality. That is Toronto Real Estate by the Numbers for October 2022. See you next month as always. Talk soon.